This is Daniela Camboni for Kitco News, and we are at one of the most prestigious events during the PDAC, the U.S. Gold Event Gala at the Four Seasons Performing Arts Center in Toronto. And this evening we had the pleasure of speaking with the host of the night, Mr. Robert McEwen, the CEO of U.S. Gold.
Easy, $2,000 an ounce.
What does that say about the economy if gold is at $2,000?
Well, it says that paper money isn't worth as much, and, well, it's not there. Somewhere lurking in my pocket is my $100 billion note. You know, this $100 billion Zimbabwe note. And that's symptomatic of the problems, that governments are printing excess amounts of paper currency, and it's cheapening the value. It's making everyone's bank account worth less, and so you need to go out and find a way to protect it. The governments aren't going to do it. They are powerless to stop themselves from printing money to anybody that has a problem. So they're not addressing the problems front on, they're just deferring them. And it's up to you and me and everybody else to go protect themselves by going into gold, going into other hard assets. I happen to like gold bullion, and I like junior gold mining stocks because they're going to run. Not all of them, so you got to be a little careful, but you try to pick the ones that are going to run, and I think that'll deliver you multiples on your investment, and that's what you're going to need to protect yourself in this type of environment. I'd like to see the CEO have a large equity interest in the company. I don't want to see him taking a large salary and lots of options and have no stock. I like to see the property to be in a place where I don't think it's going to get taken away by a foreign government, that there are not people with guns, more guns than we have, and no laws. So I tend to go in the Americas, parts of Africa, the former Soviet Union. I'm a little frightened of those, and it's also a long time to travel to, and air travel is getting more difficult, right? The Chinese and the Indians were saying for the IMF to sell their gold to fund the problems in the developing world, and then India came along and just went, whoop, I'll take 200,000 of those, or 200 tons, half your gold, and the Chinese went, how'd that happen? And I was thinking that the Chinese were positioning themselves to buy all that gold. So I think when the IMF offers it, it'll be gone in a nanosecond, and it'll have no depressing effect on the price of gold.
This is Daniela Camboni for Kitco News. Keep watching Kitco.com for your latest metals information.